Nifty 50 just crashed over 3% this week, hitting a critical support zone. Is this the start of a bear market, or a buying opportunity? I'll break down the key levels, volume trends, and exactly what traders should do next. Let's dive in. Welcome back, traders. Today, we're analyzing the Nifty 50, which closed at 22,161.60 this week, down a sharp 742 points. That's a 3.24% drop in just 1 week. The index is now hovering near its active price range between 21,743 as support and 22,254 as resistance. But here's the twist: multiple indicators are flashing a strong sell signal. Let's unpack the data and build a clear action plan. Starting with the price action and trend, on the weekly chart, we see a clear downtrend forming. Nifty has broken below the crucial psychological mark of 23,000. The 52-week high stands at 26,277, and we're now over 4,000 points below that. That's not just a dip, that's a signal of heavy correction, possibly transitioning into bearish momentum. The most immediate support is at 21,743. If Nifty breaks this level with volume, the next major support lies at 21,281, which also happens to be the 52-week low. A break below this level could open the gates for deeper corrections toward 20,800 or even lower. Now let's talk volume. Volume this week spiked to 647 million, that's a huge surge compared to previous weeks. This spike isn't due to bullish buying, it's panic selling. Institutional investors seem to be offloading positions, and retail traders are getting nervous. This type of volume, combined with a price drop, confirms that this isn't just noise, it's a trend shift. Now, if we look at resistance, 22,254 is the immediate short-term resistance. A close above this level might give some temporary relief to bulls. But unless we break above 22,500 with volume, the market is still vulnerable. So what's the trading strategy in this market? Here's my plan for the coming week. If you're an aggressive short-term trader, look to short Nifty near resistance, ideally around 22,254. Place a tight stop loss just above 22,500. The target for this short trade would be around 21,743 or even 21,500 if the breakdown continues. If you're a swing trader or positional trader, avoid getting caught in the noise. Wait for confirmation. Either a bounce from 21,743 with volume, which would indicate strong buying interest, or a breakdown below it for a clean short entry. For long-term investors, this might be a good time to stay on the sidelines. You don't have to catch the bottom. Wait for the index to reclaim 22,500 and sustain for 2 to 3 sessions. That would indicate that the bulls are regaining control. Until then, capital preservation is key. Now, let's address the elephant in the room. The chart clearly mentions, wait for breakout. So what does that mean? In simple terms, the market is stuck in a consolidation zone. It's not showing strong directional conviction. Whenever you see a wait for breakout signal, it means don't jump in just because it's moving. Wait for confirmation. That breakout can be upside or downside, but it must come with volume and clear candle structure. A breakout above 22,254 could bring a relief rally towards 22,800. A breakdown below 21,743 could trigger a rapid fall toward 21,281. So keep these two levels marked in your charts. And now, here's the golden rule: always follow risk management. In volatile times like these, don't risk more than 1 to 2% of your capital per trade. It's not about being right, it's about staying in the game. Before we wrap up, let's quickly summarize the key levels to watch for the upcoming week. Support zones. First, 21,743. Second, 21,281. If these levels break, downside momentum will intensify. Resistance zones. Immediate, 22,254. Major, 22,500. Short-term outlook remains bearish as long as Nifty trades below 22,254. Keep a close eye on institutional flows and volume data to stay ahead of the trend. Now, a lot of traders ask, is this a crash, correction, or just a pullback? From a technical view, we're witnessing a correction that could turn into a trend reversal if 21,743 is breached. So don't rush in, plan your trades, and trade your plan. If this video helped you understand the Nifty 50 situation clearly, do me a favor. Smash that like button, subscribe to the channel, and hit the bell icon so you don't miss my next update. Drop a comment and let me know, are you bullish or bearish for the coming week? Let's get a conversation started in the comments. And if you haven't yet watched our last video on the Nifty 50 fake breakout strategy, go check that out, I've linked it right here on the screen. Thank you for watching. Trade safe, trade smart, and see you in the next one. Disclaimer, this is not financial advice. Do your own research or consult a financial advisor before making any investment decisions.